Tesla's stocks have experienced significant growth, partially due to news related to China. I'll definitely show you my portfolio to see what's happening in it right now. I'll also show you the volatility, which is starting to rise, and we'll look at the smile in volatility, historical implied volatility, and most importantly, the trading volume in options, which is the most important indicator at the moment. I'll also show you what the market forecasts. We'll definitely summarize the results for the past week. As a reminder, I'm conducting an experiment to outpace Tesla's stock. I started with $10,000 and we'll review what has happened during this time. But let's start from the beginning. The stock rose by 20% after the report, which is a significant growth. Although the report itself was not so good, we can look at the data and see that almost all indicators for Tesla are down, including profit, revenue, and margin. However, Tesla still grew. Most likely, this was partially due to its oversold condition, as we see that Tesla was at low levels. It fell 65% from its peak, and here we saw a rebound from oversold, but today there are news coming in. Here's what they're writing. The automaker agreed to launch its full self-driving, or FSD, software service in China based on mapping and navigation functions provided by local technology firm and search engine Baidu. Volatility is indeed a positive sign, but let's look at what's happening with volatility, specifically the volatility smile. Before the report, it was very high, then sharply dropped after the report, and now there's been a sharp spike in volatility. All of this is partly due to the news. Regarding Tesla, let's examine the volatility smile. As we see on the upside towards call options, the volatility smile is not increasing. However, on the downside towards put options, the volatility smile is increasing. This indicates that investors are hedging their purchase stocks, especially through put options. It's quite normal for volatility to skew towards the downside. Let's also look at historical and implied volatility at the moment. Historical volatility is represented by the gray line, implied volatility by the white line. As we see, they are almost equal, especially on the near-term side. Historical volatility is slightly higher, but overall this situation is perfectly normal when both historical and implied volatilities align. But I also want to remind everyone that trading can involve more than just the stock itself. It can also involve volatility. How can we do this? For example, we can say that volatility will increase by 20% by August. Again, there's no guarantee this will happen, but let's assume it does. We can then see what the artificial intelligence suggests. It suggests buying a call at a 190 strike for August and selling a call at the same strike for September. It's the same strike but different expiration dates. This strategy is built on increasing volatility. However, I wouldn't recommend solely relying on artificial intelligence. You should understand how the market works and manage your positions wisely. Also, let's look at the volume of options trading. As we can see, there is a very large volume concentrated around the $200 and $190 levels concerning call options. Additionally, we have a very large volume concentrated from $165 to $180 concerning put options. What does this mean primarily? Primarily, we see that there is a huge volume wall here, which won't be easy to break. And as we see, we were precisely pushed back from this wall at $190. It's a massive wall of options. Market makers certainly don't want to let it rise because if by any chance Tesla stock breaks through this level, they'll need to hedge all their sold call options. Let me remind you how market making works. They sell you call options. And to avoid losses on stocks, they are forced to hedge these sold call options by buying stocks according to the delta of the options. This is what we call delta neutral hedging, and the higher the stocks go, the more of these stocks they need to buy. And it turns into a spiral. And as we see, $190 has a very large volume. Market makers will need to hedge all this volume. Therefore, as long as Tesla hasn't broken through this level, and if it does, the next level will be at $200 as we can see. But this is concerning this week because here, specifically for the week, the options have a large volume concentrated precisely on the nearest week. The following weeks might change slightly. Now, let me show you the 3D volatility. It consolidates all the volatility data, including expiration dates and strikes, which I often use when formulating strategies. It's useful. Now, let's review and summarize the past week. One of my strategies closed, bringing in around $20, so right now I have a sold call spread 180-200. Yes, at the moment this call spread is incurring a loss of around $500 as we can see. Here is my loss on this call spread right now. But I'll show you how to handle this situation, what I will do, what steps to take if, of course, Tesla doesn't drop by then. If the Tesla stock goes below $180, that's good. I won't even do anything here. If it starts to rise, I'll show how to manage this position. Also, today I sold another call spread. Everything is the same. Let me record it in the table. I'll add it immediately. This strategy is aimed at May 17th. It will allow me to earn around $89, and of course I included $2 commission. Let's see what's happening today, April 29th, 2024. At the moment, Tesla is priced at $185. I'll enter this into and as we can see, my portfolio is currently growing by 8%, while Tesla stock is falling by 7%. and the difference is 15% from my strategy. As we see, initially my goal was to outperform Tesla stocks through smart position management. As I always talk about it, always starting with $10,000. I use combined option strategies, also slowly buying Tesla stocks themselves. But of course I had a much larger lead. Let's look at the graph. The blue line is my strategy. The red line is Tesla stock. As we can see, over the past week, Tesla stock has grown by 35%. As we see, the red line is growing very strongly. The blue line is not growing as much. But as we see, the blue line, that is my strategy, has hardly fallen. As we see, it's steadily, absolutely steadily growing. This is how an elite portfolio of a professional should look like. No declines, growing steadily. And as we see, no matter where Tesla stock goes, we still grow slowly. That's how you need to manage positions wisely. I always talk about it. So the situation looks like this for now. I'll remind you of my philosophy. I don't know where the stock will go. Yes, I'm saying it outright. I always talk about this. I don't have the ability to predict price movements, and I assure you, nobody can reliably predict. If someone claims they can, they're likely not being truthful. So how do you make money? The answer lies in prudent, professional position management. That's how I do it. You can track everything I've done, how my portfolio has grown. In previous videos dedicated to Tesla, there's a whole playlist you can check out. You can see what strategies I employ, what analysis I use. Everything is transparent. Therefore, no matter which way the stock moves, I continue to profit. That's the key to success. But let's see what the market predicts for Tesla. As we can see, there's a high probability that Tesla will be between $180 and $185 in a month. That's the market forecast. If we look at the forecast for July 7th, the market predicts Tesla to be between $190 and $180. The most likely range is from $170 to $190. So the market forecasts the price in this range. Again, I always say you might believe Tesla's stock will rise to $300. You should never underestimate the market. I always advise everyone to act with the market, not against it. That's my position and logic. But as for now, what might happen with Tesla? So fully expect that after some pullback, Tesla might continue upward movement, at least to $200. That's this significant volume. I still think we can reach it. But again, it doesn't mean it will happen this week or next week. Most likely after some pullback, we might start to grow. But again, until I see a complete reversal, it might just be a small rise before a more serious correction across all markets begins. Yes, most likely by the end of 2024, there will be some recession. Therefore, markets may correct. But again, I'll talk about this a bit later because there are no prerequisites for it yet. But you always need to be prepared. So before Tesla rewrites its historical highs, I still think we need to go lower. And only then do I fully expect that we'll enter a new phase of growth when Tesla reaches $500 and beyond. But again, this is just my opinion. However, this might not happen in the next year. If you're long-term, if you're ready to endure, of course, it's a good thought to have. But don't expect quick gains. Tesla's growth in a week or two, it doesn't happen like that. Also, I advise you to watch my previous video where I talked about my portfolio formation strategy. Very soon, I'll start a new experiment where I'll be opening a portfolio from scratch. I'll be buying everything. It will be completely transparent. I'll explain the strategies I use to outperform the S&P 500 index. I've already recorded the first video in this series. Be sure to check it out and also leave comments if you have any questions. I'll respond to all comments.